Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handset Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we had that announcement from the Bank of England last week that they weren't going to cut interest rates. Now that took the market by a bit of a surprise. It sort of engendered a little bit of risk appetite actually back into the market, and you're seeing a continued rebound in sterling, continued correction in the yen, and also on the precious metals as well. Interesting moves that we're seeing in these markets. Equity markets seem to be relatively supported also at the moment, but are we sort of about to get a bit of a change? Because I still think that these market moves are going to be near term in lengths, and I don't think that there's going to be too much further before you see that continued sort of move or the start of the reaction from the central banks in terms of looser monetary policy. We've got the ECB this week, which will be interesting because the ECB follows the Bank of England, which didn't cut interest rates. What will the ECB do? Will they try and get ahead of the curve? Will they just jawbone and say that they will be looking at the impact on the Eurozone economy and then further down the line possibly react after that? I'd say that's more than likely to be the course that the ECB takes, but it will be interesting to see what it does this week. Now, also, I think that with the Bank of England move last week, we had an interesting comments from Andy Haldane, who's the chief economist of the Bank of England, and he suggested that there was going to be some material easing from the Bank of England. So that sort of puts the focus on initially the the inflation data and also the retail sales this week, which are the first bits of data that we're going to get that sort of include the Brexit reaction that we had on the markets. So that will be interesting this week as well. So quite a lot going on, and the markets will be sort of focusing on that, I think. But in terms of what the forex markets are talking about, I think we're still looking out for this sort of dollar strength, I think, which seems to be sort of bubbling under. It seems to be ready to sort of take hold again. You've got the dollar index, which is sort of consolidating at the moment. It's trying to break out again to the upside. You're seeing that euro dollar just holding on to support. It seems to be sort of eking downwards at the moment, ever sort of lowering on the reaction highs, and sort of pressure seems to be building to the downside. So it'll be interesting to see what happens there. Sterling, as I said, is an interesting one because we've had this reaction higher in sterling. Still a lot of volatility on sterling and reactions. I mean, Friday, for example, 350 pips of high to low in terms of the sell-off on the back of strong US data. Markets are still very wary in terms of exactly what sort of direction to take on sterling, and I still think that ultimately rallies are a chance to sell on sterling. Dollar yen, again, 600 pips of rally we've seen in dollar yen since the bottom a week or so ago. That is an incredible rally. That is a very large rally in the context of what we've seen in the moves and the rebounds on dollar yen in recent months. And it's now coming up to a key resistance level. I think you've got the chart here that shows you that you've got 105.50 up towards sort of 106.80 resistance area. Could that be where we start to see that rally starting to peter out? Now, in terms of your equity indices, we've seen some recoveries. I suppose you've got the search for yield that goes on at the moment. You've got record lows on bond yields. So where do investors find these yields and plays in the market? Well, equities presumably are one such play. So that's why you've seen the reaction higher. Also, you've got the sterling weakness, and FTSE is supported by that because 70% of FTSE earnings are from abroad, so negative or sort of weakness in sterling benefits the FTSE 100 companies. And also the S&P 500, which broke out last week. So really interesting moves there. I think ultimately these looser monetary policies for the central banks are likely to be driven on the Bank of England, and also the Fed, which is likely to also hold off from rate hikes possibly throughout this year now. And that sort of should help to support these equity markets. And I think you've got some nice support: 6427 on FTSE, 2134 on the S&P 500. So a few levels there on this week for the key supports. And in terms of your commodity prices, well, Again, as I said, you've got the precious metals which have come under a bit of corrective support. Gold has come back. Silver is also starting to come back as well. Is this going to produce some nice little buying opportunities? I think it will, because I think that the central banks will increase their monetary easing, and that is supportive for precious metals going forward. And again, that looser monetary policy helps to sort of engender the continuation of the negative real interest rates, and that is supportive for precious metals. The oil price is a difficult one, because at the moment it's sort of coming under a bit of dollar strength, which is not helping it, and the sort of concerns that the market has had since the Brexit decision, that's sort of also impacting on global growth expectations. That's a negative drag on the oil price. So it's still a little bit depressed. It's not really broken down decisively yet, but certainly I think it's sort of still on the brink of a possible further correction. Now, in terms of what we need to look out for on the markets this week, well, we've got a fair bit of data, not a huge amount. You've got this, as I said, this UK inflation data and a little bit of German ZEW. I think the ECB will be a major announcement that the markets will be moving around on, and that comes on Thursday, and also the UK retail sales I think will be interesting as well. So not a huge amount in terms of US data this week. A little bit of housing data, building permits and home starts, and also existing home sales. But generally speaking, I think the market will be focusing on the Eurozone and the ECB monetary policy. So with that in mind, I wish you good luck in your trading this week, and I'll speak to you again next time. Thank you.